Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, January 5th, 2025. Hope you guys are having a fantastic weekend and are ready for some cold weather, especially if you're in the Northeast. So, anyway, Friday we got a decent bounce. I actually did not make any trades. I got it. I actually wasn't really feeling great, but by the time I got to the computer and everything, we already had the big move up already. So I wasn't really looking to fade that. So ended up just really just watching it, and that's it. I really wanted to wait for, this week to start, but unfortunately, I'm going to be traveling tomorrow. On my flight is at 11 o'clock. I get back into the Savannah area, like, around 1. By the time I get home, it's gonna be around 2 o'clock, somewhere in that range. So tomorrow is gonna be a little bit of a waste, but in any case, we know, let's just figure out what's gonna be going on so we can be prepared for Tuesday. So just taking a look at the bigger picture here, this is the daily chart, and as you can see, this is showing you the move that we've seen, that started all the way back in 2022. So that's from these lows, and it's going all the way to these highs. So just to, I mean, to give you an idea where we are, I mean, a bare minimum retracement is typically down to the 23% retracement. Being we haven't really had too many, like, even if we just take this here and look, this is a 23% retracement. If we take here, never got it. This one was a 38%. So you can see we get these retracements, and if we're just going to do a bare minimum, which I don't believe that's going to be the case, I think it's going to go a little bit deeper. But let's just say this is it. We're looking at a move coming down to the 54.90 area. So we got, that's a 300 points away from where we are right now. Actually, it's 55, yeah, 400 points. So this would be your first target. That's also matching up with the 200-day moving average. So to anticipate that we're going to get some backing and filling down to here makes perfect sense. Now, it doesn't mean that we're going to be going straight down and just to get short. We're going to get big moves back and forth. But I think that really when we see the market give us some kind of pullback down to here, this is going to be your good buying opportunity. So this is just giving you the overall what the backing and filling would be. So now let's take a look at the 60-minute chart, which really we're just going from these lows here on August 5th, 2024, up to the highs that we made. So you can see we're at the 23% retracement, right? We made it here. This was the support line. So we had this support here. This was used as resistance, support again, and this is where we found it. So this made sense on it, especially since we had bullish divergences in place. And this is what we got. We got a 75-point move to the upside on Friday. So you can see we got people were a little bit tentative as soon as we started getting up towards the 200-day moving average at 59.65, and I do believe there's going to be sellers waiting. Now, the only thing that we want to keep an eye on, and you want to be a little bit careful, is if we do come up this right. Let me just do this. I'm going to copy this, duplicate it, and this is right here. That's a gap fill. So we're looking at if they are going to come and fill this, it's a move up to the 60.37. And remember, this was the range that I've been talking about. And I said, if it's going to follow this range, then there's a chance we're coming up to the 60.50 level. So we got to just keep that in mind. Also, we have this gap. It almost was closed. It's kind of hard to say. I guess this was closed already. But in any case, so this would be an upside target. Now, if we see the bears step in and we start taking out, whatever the support levels that we have, then we're not going to make it up here to close the gap. And this range is probably going to be broken to the downside. And if it gets broken to the downside, really what we would be looking at because again, this is just below a 23% retracement. So if it breaks this support, we have this gap right here down at 57.83, and then we're looking at the 38% retracement down at the 57.27. So these would be probably better areas that I would feel more comfortable possibly looking for long scalps. But right now, this was a nice setup. It just, like I said, I missed it because we had the sell signal, we had the buy signals in place, very oversold, and so this made sense. But once we start getting up into these resistance areas, that now things get a little tricky, and we may have to be looking, both ways for it. So, pretty overbought on the stochastics here or momentum. We just have really the bullish divergences, so that's obviously being played out or it played out, and we don't have any sell signals. So on our trend finder, we are on a buy signal. So look at this. This was the trend was in place all the way from the 26th of December down to Friday. So that was a nice move on the downside. Now, if we take a look at the 15-minute chart, hang on one second. There we go. Here you can see. So now what I'm doing is just measuring this top to this low to find out where some pivots would be. So we made it through the 23% retracement, made it through 38%. Now we made it to the 50 and made it a little bit above it. And now you can see they're starting to use the 200-day moving average as support. If they break that, then really the next line is going to be down at the 59.15, which also matches up with this support. Now, something that may be playing out, again, it's a little bit early to be saying if this is definitely what's going to be happening, but we could be forming some type of little inverted head and shoulders here that could be forming. And basically, this is the way it would be. We'd get a pullback somewhere down into this level. So this would be our left shoulder. This would be the head. We come down. This would be the right shoulder. Now, if this is the play, let's find out where the target is. So we're going to take it to the top, to the bottom. And now what we do is simply take this and put it at the top, and this is it. It's all the way back. Remember, I was telling you with the the actual range that we're in. So this is the top of it, right around that 60.45. And if they do form this pattern here, this is the upside target on it. So we have to just keep that in mind that they may try and keep the markets going higher, but I still believe there's a bigger move coming to the downside. But let's just trade it day for day. So here you can see we have some sell signals in place, very, very overbought right here. And we are on a buy signal here. So this gap up triggered the buy. So really what I think the safest way to trade this would be if we break through this through the 200-day moving average here, then you anticipate we're coming down and we're going to close the gap at 58.71. So this would be 59.14 down to really the two targets would be 58.91 and then the 58.71. So those would be just quick trades. And again, if it comes down and holds this support, this is going to be the right shoulder. So we may come down and close this gap and then make the right shoulder and possibly try higher. We just have to keep an eye on things, but the pattern, fits with everything. So, if we're just going to take a look at really what some support levels could be, hang on, come on, what's going on here? Move. All right, hang on one second. Okay, so if we're just going to take a look at some support levels, and again, this is going from this high to this low. You can see the 23% retracement, 59.21. Again, this is like the gap fill here. So 58.75. I think this would be, really the area that you'd be wanting to look to build a long position for a possible bounce. Now, if we take this out, really, if we go below these levels here, let's just say to 58.54, then most likely we're taking these lows out and we're starting the next leg down. So anyway, let's see what on the again on the upside, if they continue higher, we have the 59.65, so it's about 23 points higher. This is going to be resistance. If the bulls can get above it, then we're going to start shooting for that 60.50, which would be the range that I've been talking about. On the downside, support levels are going to be the 59.12, and then we start coming down to this 58.89. Let's just say 58.91 down to the 58.76, and this is where I would be interested in looking for a long trade. But again, we have to have everything lined up. So let's see what plays out tomorrow. Again, I'll be able to get the morning notes out, but after that, I'm going to be gone until about 2 o'clock in the afternoon. So have a great night, and I'll talk to you guys.